welcome back to the channel, the Daily Forex. In today's video, I'm going to share with you guys a powerful strategy that you can use to trade boom 1000 index successfully. And I want you guys to pay a very close attention to what I'm about to share with you right now. If you take a closer look at my chart right now, you can see that I have about 3 indicators on this chart right here. We have the commodity channel index, I have the MACD, and also the ADX, which is the average directional movement index. And I'm going to share with you how you can use these indicators to trade boom 1000 index successfully to avoid spikes and a better sell entry position in the market. All right, so let's get started. So first and foremost, I'm going to share with you guys how the strategy works and the parameters. So let's start with the parameters for the strategy. We'll go to the indicator section right here, and first on, you want to put on the indicator window 1. You put it accordingly. You put the average directional movement index, you put the period on 14, then the levels, you add level 10, 50, level 90, and level 25. The style, you put it on 4 pixels. The color, you put it on black. Then you use this straight line pattern right here. Then you click on done. All right. Then for the time frame, you put it on all time frames. The style right here, you put it on 2 pixels on the color of white. The line is going to be the first one, YD plus DL on 3 pixel color white, minus DL on 1 pixels with the middle line right there, so as you can see. Then you put the plus DL on the middle as well. Then you click on done. All right. Then you put the commodity channel index, period on 14. You apply to typical price HLC/3, just as you can see on my screen. Then you can add levels if you want to, as long as you know what you are doing, but I didn't add levels for this commodity channel index. You put it on all time frames. The style, you put it on 3 pixels with the color blue. Then you put the pattern of the line, it's going to be the first one right here. Then you clicked on done. All right. Then for the MACD indicator, you put the fast EMA on 14, the slow EMA 24, and the MACD SMA on the level of 10. You apply to close. You put it on all time frames. The main color, you put it on 4 with black color. The signal, you put it on red on 4 pixels, which is the 4th line. At the ending, then you put it on this first line right here as well. Then you click on done. All right, now let's get to how the strategy works and how you can make it profitable to catch spikes, and how you can use it for a sell entry position on boom 1000 index. You can also avoid spikes using this strategy, so it works both ways if you want to avoid the spikes or if you want to catch the spike on the market. But mainly this strategy also works on a better good entry position for a sell. All right, okay, so we're back on the chart right here, and what we can clearly see right here is the commodity channel index, the MACD, and the average directional movement index. So this strategy goes different ways, okay, and they all works together. Now this is the MACD right here, and this line right here is the commodity channel index, which is the line we put the color of blue right here is the commodity channel index. This blue line right here, this line, this straight one here, is the commodity channel index. This level, the level of 90, 50, and 25 plus 10. This red line is also the MACD. So this is what we're going to pay attention to while using the level of 10, the level of 25 as well. Okay, now this is where it gets tricky. When this line, which is the commodity channel index, yeah, the commodity channel index line, this blue line right here, which is the commodity channel index, once it go below the level of 10, all right, it has to break through the level of 25, the level of 90 below. Okay, once it goes below this level of 10, you can place an entry for 5 candlesticks for a sell. All right, you place 5 candlesticks for a sell, then you exit the market, because it's at the level of 10, below the level of 10. So once you have gotten 5 candlesticks from that market, the next step, the market could spike, which the market could buy. All right, so that's what you want to avoid in this type of market. Now you can see that this strategy is a bit risky and also safe as well. So taking that 5 candlesticks is the safer side on this market. And when this line right here, which is the commodity channel index, once it's below the level of 10, you can also use the MACD All right, you can use the MACD red line to detect when the spike would comes, but it don't always show you all the time. Now if you take a look at this point right here, okay, take a look at this point right here. At this point now, you can see that this commodity channel index line right here crossed below the level of 10, and if we place a sell at this point, we continue to sell the market. And you can see that this red line crossed below right here the commodity channel index, and the market spiked immediately at this point at this junction. If you trace it downwards, you can see that when they cross, the market spiked and it bought at that point right there. Okay, and at this point as well, when it crosses below, not above, okay, it crosses below this point, the market buy. Now take a look at this point. If you take a look, zoom a little bit into the chart right here, trace it down with me, guys. You can see that after this candlestick, trace it here, this is the crossing. All right, when they have crossed at this point, the next step was a spike in price movement. Okay, so you can use the third zoom level for this market chart analysis. All right, now what you need to note is that once you are in the market at this point, okay, when the market gets to the level of 10 and you place a buy, and you see that the market breaks above the level of 25, the market will buy. That means that the spike on the market is going to be a huge amount of spike. Okay, if it breaks above this level of 25 after you have placed a buy, after you have placed a sell in the market, you go to your 5 candlesticks and you exit, and you see that it breaks above the level of 25, the market will continue to buy to the very point of the level of 90. So what you need to do is to wait until the level of 10, below the level of 10, then you place a buy. Now pay attention to these guys. Remember I told you guys that sometimes when the MACD line, which is this red line right here, remember I told you guys that you have to cross below before you can see the next spike movement correctly. And also, if this line right here, which is the commodity channel index, crosses above the level of 25, you can see that when this line curves up, it's giving a spike in the market, just as you can see right here. Okay, now imagine that you sold at this point below the level of 10 and the market spiked. You can see the spike was a little bit spike right here before it sold again, and the next step was a very big buy. Now you can see that when it gets to this point, it didn't cross the level of 25, then it went down and it went upwards after 2 candlesticks. So this is what you need to watch out for. Okay, sometimes the market might go like this just to trick you. Okay, so these are things you need to watch out for. Take a look at the MACD. Okay, take a look at the MACD indicator. This is the downside of the MACD and this is the uptrend of the MACD. Now whenever there is an uptrend of the MACD right here, the market always buy on boom. Okay, whenever there is an uptrend. All right, now you take a look at this point right here. Even at this point, it crossed below the level of 10, then you place a buy. When you see a crossing at this point right here, you exit the market because the market is going to buy. When it gets to the level of 10 below right here, you place a sell entry, okay, for 5 candlesticks or up to 10 candlesticks on the market. And when there's a crossing below, which is this red line of the MACD, and the commodity channel index crosses above at this point right here, you see that after 1 candlestick, the market bought up to this point. Okay, and as well at this point right here, after this candlestick right here, the market bought, and there's a huge amount of spike on the market. And take a look at this point right here as well. At this point right here, went to the level of 10, you take a buy, you take a sell for 5 candlesticks. It crosses above and below. Okay, after this candlestick, trace it with me, guys. Here, this is the candle, this is the crossing at this point right here. After that candlestick, the next step was a buy. Now you can see the signal where it can give you if you want to catch the spike. So all you need to do is just wait for this perfect opportunity on the market. Remember that it has to be the downtrend of the MACD, and the commodity channel index needs to be the level of 10, below the level of 10, for this to work perfectly for you. Okay, just as you can see right here. Even at this point right here, level of 10, you place a buy for 5 candlesticks. It crosses above the level of 25 here. You can see here the line goes downwards and it goes upwards, so there's a crossing. You can see even at this point it was supposed to cross, but the line of the MACD was shortened. Okay, but there was still a spike. If you take a look at this, so there was still a spike at this point right here. There was still a spike. Okay, so I hope you found value in this video, and this strategy helps you to trade the bond horizontal index and help you catch spikes on the market when you need to, and help you see a better entry position for a sell entry on the market. Okay, so what you need to pay attention to is the level of 25 and the level of 10. Below the level of 10, you place a sell for 5 candlesticks. After you have gotten those 5 candlesticks, then you exit the market. And when you see that the commodity channel index crosses above the level of 25, the spike that's going to be in the market is going to be a huge spike. Okay, it's going to be a huge spike for a buy. All right, so I hope you understand what I've said to you guys. Now, if you found value in this video, do to like, subscribe to the channel, the Daily Forex, for more awesome trading tips and strategies. I'll see you guys on the next video.